I think everybody can kind of feel with the inflation that's in the air these days. I was there in 1971. I lived through it and I was, in my late teens. So I didn't really understand that in July when I had a $20 bill, it had some level of backing of gold. And in September of that same 1971, it had just debt backing. And it was now in the control of the central banks. I was too young to really understand that at that time. But having lived through it, I know what it smells like and tastes like and feels like and looks like. And these are all repeatable patterns. 100% we're at the very end. How does it impact the normal population, the general public? I think you are seeing this right now in the inflation that's raging. For them to say it's transitory is garbage because it hasn't been transitory since 1913. And it's not transitory now. There are too many things that are happening. Wages, what are you going to do? Go in and cut wages? I don't think so. All of the issues that we're seeing with the supply chains and globalization. And keep in mind, in the 80s, when I first became a stockbroker, all the talk was about globalization. And I remember saying to myself, not so sure that this is such a good thing for the normal person. Now, how that impacts markets, we have been taught that the only choices for investment are Wall Street products. So stocks, bonds, mutual funds, whatever. Here's the problem. You can only convert that wealth into, in this country, dollars. So if the dollar has no value and nobody will accept it, then what do you have? A trillion times zero is zero. And that's the piece that people miss. Baked into the very currency system is inflation because they knew governments could tax you without having to go through legislation. I mean, if you know that you're going to get higher taxes, you might complain, right? They don't want you to complain. They want you to comply.
Lynette Zang often points out that inflation is a hidden tax, and it's designed to benefit corporations at the expense of everyday people. She highlights how inflation enables corporations to pay workers less over time, except for a select few. They give you a nominal raise, and it might look like you're earning more, but your purchasing power continues to shrink. In 1970, the average wage was about $9,500, and one income was enough to support a family of four. Sure, they weren't living in luxury, but they could get by. Fast forward to today, average wages might be around $54,000 to $58,000, but now it often takes two incomes to make ends meet. Even families earning $100,000 are struggling, living paycheck to paycheck. And remember, during the pandemic, households earning up to $150,000 were getting stimulus checks. What does that say? It says the dollar's value has been eroded so much that even those earning six figures are struggling. Lynette frequently warns about the system's intentional design to create wealth inequality. It's not by accident. The central banks, the IMF, the BS, and even the Fed openly admit in their reports that they make the financial system intentionally complicated. Why? So people don't ask questions. When people see complex jargon, they think, oh, these guys must be smarter than me. They know what they're doing, but in reality, these institutions signal the too big to fail players, the insiders, to shift their money into safer positions well before a crash. And when the bond market finally collapses, as it inevitably will, those big players will have already moved their wealth into hard assets, gold, real estate, things of tangible value. Meanwhile, the little guy, and even institutional investors managing retirement accounts, are left holding the bag. She often emphasizes the importance of following what the smartest and wealthiest are doing, not what they're saying. They're quietly selling their stocks and piling into hard assets. Lynette recently referenced an article from the Financial Times about wealthy Chinese investors. They've stopped investing in real estate, given the issues in China's property market, and instead, they're buying hard assets, gold, luxury items like Rolex watches, anything tangible. When it comes to gold, Lynette has long – When it comes to gold, Lynette has long criticized Wall Street's manipulation of the spot market. The market is flooded with paper gold contracts which have no physical backing. It allows them to control the price with ease, but that paper price doesn't reflect gold's true value. According to her, gold's most critical role is to preserve purchasing power over time. She calculates its fundamental value based on its ability to hedge wealth. In her view, 1 ounce of gold should be worth at least $50,000 in today's distorted financial system. So if you can buy gold for less than that, whether it's bullion or even a high-value collectible, you're getting it at a bargain. You're hedging against the inevitable collapse of fiat currencies. Lynette also draws a sharp contrast between cryptocurrencies and physical gold. She acknowledges that both appeal to those who are dissatisfied with the centralized system and want a private way to store wealth. But is Bitcoin truly private? She doesn't think so. When you open a crypto account, you provide your name, address, and even your social security number. It's decentralized in theory, but it relies on centralized computer systems. Compare that to physical gold and silver, especially in the past. Back then, you could walk into any bank with a gold certificate and redeem it for the physical metal. It was private and decentralized. If you didn't like the government's monetary policies, you could pull your gold out of the system, effectively restricting their ability to overspend. That's why they eventually moved us to paper money. It's more convenient, but it stripped away that control. Lynette often reminds her audience that even though cash today is a debt instrument, it doesn't accrue interest, so it offers some privacy. While it won't protect your purchasing power, it can still safeguard your principal. But if you want to protect both, you need to hold hard assets.